Now let's look at taxation. The main focus of this part is called the taxable income. It shouldn't be something too new because we've talked about a lot about this in the previous section, but have a look, I'll read you this. The taxable income is calculated by finding the total gross income. So you know what gross income is, right? We've done a lot of those. That is salary, the bank interest, any extra incomes, and then subtracting any allowable tax deductions, such as work-related expenses, charity donations. The taxable income is your gross pay, such as your salary or any allowances that you get, any extra incomes that you get, you add them all up, and the total amount that you get is your gross pay. Now, after subtracting any of these tax deductions, so there's lots of different types of tax, but we've got some work-related expenses, charity donations. These things are all included as tax deductions. So after making those deductions, that's what we call the taxable income. Okay, so it's pretty similar to net pay. Have a look at this. Taxable income is the total gross income minus the tax deductions. So the main deduction that you're going to be considering is tax. Okay, that's why this topic is called taxation. So let's get started with the questions. Jane earns an annual salary of $76,000 and the investment return of $3,512. Now she had allowable tax deductions totaling $3,600. Find the taxable income. That's her salary, annual salary, and she also gets investment return. So say, for example, she's invested in something and she gets a proportion or a share of that in return. That's also part of what she gets. So it's a little bonus for her. This and this is all part of her gross payment. Now she makes tax deductions of something like this. So we add these together because that makes up her gross payment, and we subtract our tax deductions, and that will be your taxable income. So just add those and subtract that one, calculate it, that's what you should have. That is your taxable income, okay, after making any tax deductions. Question 8, Kate is paid a weekly retainer of $240 plus 5% commission on the value of her sales. She sold goods to the value of something like this and claimed to a total of that in tax deductions for the year. Find her taxable income. So we all know what retainer means. I've already said that in one of the other topics. This is all done, 240, plus we get 5% of any of the sales we make. Now see, she sold goods to the value of this much. That's the amount of sales she made. And then she also had tax deductions of this much. So first of all, her weekly retainer of that plus her 5% commission should be her gross pay. We get 240 plus the total number of sales times the 5%. So this part is her gross pay. And then we subtract the tax deductions of 4,000 something. And then calculate that. That is your taxable income. Paul's gross annual salary is $50,000. His tax advisor approved the following tax deductions. This much for stationery, expenses, travel expenses, cleaning, uniforms. These are all little tax deductions that we need to make because those are purchases that Paul needs to make in order to perform his work. Find the total value of Paul's tax deductions. So as I said, all of these are part of his tax deductions. Add them all up, calculate it. That is the total tax deductions that Paul needs to make. Now B, find his taxable income. That's the annual salary, which is the gross payment. Subtract away your tax deductions, and then that will be your taxable income. So please just double check that you've got that as well. Question 10. Okay, find the tax payable for annual taxable income of $12,000. Watch very carefully here, guys. This is a little table that you need to follow. Someone gets an annual taxable income of $12,000. That's their taxable income. For the first $20,000, we don't calculate any tax at all, $0. From $20,001 to up to $50,000, we only calculate 17%. And as the taxable income increases, that proportion, say for example this much, will be 30%, 42%, and it increases over time. 12%. See how we have up to 2,000, up to 5,000, up to 60,000. So that was 50,000, 60,000. Where does 12,000 lie? Approximately where? Well, I can say it's approximately there. That I can say it's 12,000, isn't it? So therefore, 12,000 is within this column here. It's under that. It's between the 0 and $1 and $20,000. Do we calculate any tax? No, we don't. If that's the taxable income, the tax payable is simply $0. That's it. So you always look at that and then you calculate where approximately it lies in and what proportion we need to calculate particular percentages. So that's $0 as tax. Now 11, find the tax payable for annual taxable income of $34,000. Where approximately does $34,000 lie? Well, it definitely exceeds 20,000, but it's going to be a little less than 50,000, so approximately there. There is the $34,000. This much, which is the $20,000, we have to calculate 0% tax. So for $20,000, we calculate 0% tax. How much is this part? Well, that part is $34,000 minus the $20,000, isn't it? So you calculate the difference, which is $14,000. Now for $14,000, we calculate 17%. So calculate their individual percentages. So 20% times 0% is simply $0. And 14,000 times that one, 2,380. So his total taxable income would definitely add to 34,000, and their tax payable, you add these together, and that's simply it. For this much, we calculate 17%. This much, 0%. So you've got to understand where taxable income lies in. Find the tax payable for annual taxable income of $56,000. Have a look, guys. Think about where the $56,000 lies in. Well, it's going to be definitely greater than 50,000, so I'm saying it's approximately there, not exceeding 60,000. This much, $20,000, 0%. This much, which is $50,000 minus the $20,000, the difference, which is $30,000, 17%. And then how do we calculate this much? That much? We do $56,000 minus all of this, which is $50,000, which is $6,000. Now we calculate the individual tax. So that times that is 0, 30,000 times 17% is that times that is that. And again, all of this should definitely add to $56,000. Yeah, that's the taxable income. Now the tax payable, add them up, and that's what you should have. Find the tax payable for annual taxable income of $68,000. So getting bigger, isn't it? So $68,000 is definitely greater than 60,000. It's going to be above there somewhere. This much, 0% tax. Now this much, which is the difference of 50,000 and 20,000, 30,000, 17%. And this much, it's simply 60,000 minus 50,000, which is 10,000. And then to get this much, we need to go 68,000 minus the 60,000, which is $8,000. Calculate them. 0. That times that. That times that. And that times that. Just use your calculator and just double check. And then add them up. You should definitely get the taxable income, which is 68,000. And add all of these up, guys. That should equal to that. That's your total tax payable for this particular taxable income. Question 14. Find the annual taxable income if the tax payable is $1,360. So this time is pretty much the opposite of the previous question. In the last few questions, they actually gave you the taxable income and you were asked to find the tax payable. But this time it's the opposite. They give you the tax payable, so the tax, we need to find the taxable income. So it's the opposite direction that we need to calculate. So again, we have these things again, you know all of these. They give you the taxable income, they give you the tax payable. Now this is not negative 5,000, it's between 0 and up to 5,100. Okay, so it's not negative, it's up to. This is the tax payable, and the total tax, this is like a cumulative column. So 0, 0, 0 plus that is that, 0 plus that is 8,100. So it's like a cumulative column. You add them all up. 1,360. Have a look at the total tax that we paid, because that's the total tax we paid. So it lies between 0 and 5,100. It's going to be in the second one. So we have to have 17%. So that divided by that should be your taxable income, isn't it? Remember how we do taxable income, I'll just call it TI, times the rate, I'll call it R%, I don't know, the tax rate, is your tax payable. But see how they give you the tax payable? We want this, we want the taxable income. So taxable income would be tax payable divided by the rate, right? So the tax payable, we need to divide by this rate. So we divide it by 17% and calculate as $8,000. But see how, guys, remember our little column there, up to $20,000, and this is $8,000, so it's up here, which means only this part is 8,000. So we need to add our 20,000. So you add that up, and that's what you should have. So you have to add the one before it, the one prior to it. So taxable income plus the little extra bit, which is 28,000, like we did in the previous question. So trying to think the opposite way. Find the annual taxable income if the tax payable is 14,400. So it's pretty much the same question. So 14,400, we always look at the total tax that we pay. That's way beyond, that's over here. So we have to look at this one. We do 14,400, and here, have a look what we're doing. I'm subtracting away this part because I only want to calculate the 42% of the amount exceeding 60,001. So what we do is we do 14,400 minus the 8,100, and only for that much, that is the tax payable. That is for the income of 60,001. Okay, the ones that are exceeding that amount. So we need to calculate the difference for here as well. And again, we divide by our rate, 42%. Make sure you work out the brackets first, divide by that rate, that's what you should have. So that's the tax payable for only the parts over that amount. And remember, we need to pay the taxable income, tax payable for all of these incomes as well. So this plus this plus this plus this will be your total taxable income. So you add them all up and calculate it. That is your answer. Get the idea? I know a lot of people will be confused when I'm going backwards, but please try to understand. And you need to understand what taxable income is and what tax payable is. That's a completely different thing. All right, so taxable income is your income after making any deductions, and the tax payable is the tax that you need to be paying. Try to understand this table. If you don't really understand, I really require you to watch these again and do some of these practice questions and exercises. So that was some taxation.